Well, good morning, everyone. Thomas Montgomery. It's a beautiful, what is it, Thursday, January 9th, 2025. It's great to be with you this Thursday morning. We get together with our distribution partners most weekday mornings at 8 o'clock Central to talk about strategies, tips, techniques, share success stories, and support each of you. Today, we're going to have a really, I think, interesting discussion. So, if my screen is shared properly, you should see the quick cash flyer. All of you should have a copy of this. It can be edited at the bottom with your contact information. So, everyone should have a copy of the flyer. If not, you can get that from Madison. I'll give you Madison's information in a moment. But today, and then we have the little inset with our agenda here. So, our agenda is three parts today. Our topic is going to be a very interesting one. Don't borrow money. Can you imagine that? Here you and I are in this space of helping people build financial literacy, helping them access capital, and you and I are doing a workshop on don't borrow money. That sounds hypocritical, doesn't it? But we're going to go through and have that discussion. Of course, we're here to answer questions. Just type those into the Q&A. We'll address those as we go through. And the end result is to go execute, to implement, to apply what we've discussed, what we will be discussing today, so you can monetize it. All right, so we're going to talk about a contrarian's view. Don't borrow money. So there's a real groundswell with financial experts suggesting that people shouldn't borrow money. Now, it kind of started with the Dave Ramsey and the consumer financial experts, because you and I know consumer finance is different than business finance, right? Consumer financial experts like Ramsey would say, well, don't get credit cards and don't charge them up. If you can't afford to pay for it cash, don't buy it. That's the whole consumer side. That's not where you and I are. You and I are on the business side. Well, on the business side, it's very normal, very typical for entrepreneurs, for small business owners to leverage other people's money to start to grow a business to reach their potential, because it's pretty difficult to just organically have enough money to start and grow a business. Very few people have that. So when we're talking about a contrarian's view to not borrow money within the business space, that is very aggressive, isn't it? Well, what we would recommend is to consider doing an asset transfer instead of borrowing money. Now, we're going to dig into that so we all have a common understanding. But before we get to that, let's talk about borrowing money. We've got 521 of you on this morning, but let's take Nathaniel. Nathaniel's on this morning. So let's say that Nathaniel wanted to go borrow $100,000. Is that free? Well, of course not. If Nathaniel or anyone else is going to borrow 100,000, they're going to be expected to pay it back. So Nathaniel's going to have to budget for the payments. Now, how long will the payments be? If we're doing our traditional business loans, we're looking at a 10-year, 120 months. So that's great because that makes the payment smaller. It's stretched out, but it's still paying back the principal amount. So Nathaniel would have to pay back the 100,000. Now, do you think Nathaniel is going to find some bank or some credit union or some lender that's going to loan him money interest free? No, I don't think so. So there's going to be interest expense. So if we're going to go borrow 100,000, we're going to have to budget, we're going to anticipate, we have to plan to make payments each month over that period of time. And we're not only going to pay back the money that we borrowed, but we're also going to have interest expense. Now, Nathaniel or anyone else here might say, well, that makes sense, right? Because if I can go borrow 100,000, put it into my business and get a positive ROI, a positive return on investment that's worth more than what I paid, I came out ahead. And I'd agree that that's the concept of business finance. Leverage is common. It's okay to borrow money because without it, we couldn't accomplish the same goals. And if we do borrow money, we inject that money into the business grows, and we see profit from it. So that would be Nathaniel's argument. Hey, I don't mind making payments. I don't mind making interest expense. But we would agree that if Nathaniel or anyone else were to borrow 100,000, they'd be paying a lot more than 100,000 back, right? Because there's going to be interest, and that interest is going to accrue over the life of the loan. So now let's kind of take a contrarian's view and look at what other options we have specifically regarding asset transfers. We brought this topic up when we introduced quick cash recently, and what I realized is the concept of an asset transfer didn't resonate. It didn't make sense to everyone. So we're going to dig a little bit deeper and use some common examples, some common analogies. So the concept of an asset transfer means that we're going to liquidate some unused asset into cash. And I'm going to give you some examples. And I bet after I go through these examples, you'll say, ah, yeah, well, that makes sense. So let's go through some examples. If you had an extra car, not everybody has extra cars, but some people have extra cars. Maybe they have an older car from when they were younger or a classic car that they don't need that car anymore. Well, if we needed money to start or grow a business, but we had some extra car just sitting there in the garage or driveway, well, we could sell that car and use that cash for our business. That kind of makes sense. Problem is, not everybody has an extra car. So let's use another example. There is a huge market for pre-owned shoes. Have you seen how these tennis shoes, these Nike shoes, and these other collector shoes, how much they sell for? Tennis shoes can sell for hundreds or thousands of dollars. They do collaboratives between Off-White and Louis Vuitton, and all of a sudden these shoes are $5,000. So there's a huge market for clothes, jewelry, purses, shoes that you don't really use anymore, you don't want anymore. So that would be another example. We could do an asset transfer. Another asset transfer example, which is not shown on the screen, is life insurance. And I know this is a little bit more controversial, but there are companies that will buy life insurance policies from the beneficiary, the policy owner, and turn it into cash. So there's lots of examples of asset transfers that maybe we just don't commonly think about, but certainly are popular in our society. A funny one, and maybe it's not funny, but go near most college campuses, and there are plasma donation centers where you can go in, they stick the needle in your arm, you donate plasma, and you walk out with cash. And the more often you do it, the more cash they'll give you incentives. So, in truth, there's lots of examples of asset transfers, giving up something that you don't want anymore, you don't use, the unused piece of jewelry, the extra car, the extra plasma, I guess, and turning it into cash. Well, none of that's exactly where you and I are in our business environment. So, what we're going to talk about is how you and I can help clients liquidate AR and turn it into cash where they don't even have to go borrow money. Because when we liquidate AR, not only do we avoid payments, and not only do we avoid interest expense, so there are no payments, there are no interest expenses, but also they don't have to qualify. So that's often the issue, right? We have people that come to us and will ask, well, how much funding are you looking for? As much as you can get me. Or they'll say, I want max funding. Okay, so you want millions and millions and millions of dollars. Is that right? Yes. It's like, okay, do you realize there's going to be payments for that? Do you realize there's going to be interest expense? Yeah, just get me whatever I can qualify for. So let's take a different approach at how to help clients get money versus having payments and interest expense in terms of liquidating AR into cash. The problem, of course, is that not everyone will have assets to transfer, and specifically, not everyone will have AR that they can turn into cash. So there's going to be instances where you and I will provide them the asset for the asset transfer. And that's in fact the design of Quick Cash. Let me give you a little background on Quick Cash. So I used to, no longer do, but I used to work for the SBA. And so if you work for the SBA at least at that time, maybe it's changed, but once a year, they would have a conference where they'd bring all the SBA advisors in from around the country. And the one where this started was when we had the convention, they called it, in Washington, D.C. So it's not always in Washington, D.C., it's in different cities each year. So when you go to a big conference, you've probably been to these. So there's some general sessions where everybody's expected or able to go, and then they have breakout sections where smaller groups. And so there was a smaller group breakout session, and the instructor asked us to divide into small groups. I think it was 4 or 5 of us, so all of us from SBA advisors from different offices across the country. And we were asked to come up with a solution to the problem of what do you do when you have a client, in that time SBA client, but a client, small business owner who wants money, who needs money, but frankly doesn't qualify. And so, of course, the shelf corporation that we talked about yesterday and that we primarily do, we're not talking about it today specifically, that was one of the ideas. Well, if you have a client that needs money, that wants money, but they don't have a fundable business, then we could provide them a fundable business. So that's the shelf corp. But also from that kind of whiteboard creative thinking, we came up with this concept, which is asset transfers. So that's really what you and I can do is we can help individuals who either don't want to borrow money or just simply don't want to have payments and interest expense, and we can provide them an asset transfer. So we can provide them 10,000, and as we talked about yesterday, if they need more than 10,000, they can just enroll multiple times. And we've had many people enroll in Quick Cash 2 times, 3 times, 4 times. I had a gentleman that called me yesterday and he's looking for $3 million. And I said, sir, we could do Quick Cash for $3 million, but I mean, that's going to be quite a few. We call this a portfolio, quite a few enrollments. So Quick Cash can be scaled up. And I think that's one of the questions that we received more than any other yesterday. Well, what if someone wants more than 10,000? That's fine. It's just a separate enrollment for each 10,000 portfolio. So with the proposition that you and I offer, the client does not have to buy assets to liquidate. We literally give them the 10,000 of assets for free. So let me pop up the rest of the page here. And this is, if you're not a reseller, want to be a reseller here, if you need to speak to someone, call Madison, past trainings on YouTube. But let's dig into the questions, comments, concerns you have about Quick Cash, because it can serve many purposes, but I wanted to open your eyes or bring attention to it is an alternative to borrowing money. Because in this case, we're giving them the assets, and then we can liquidate those assets, liquidate those receivables, turn that into cash, and the clients have no payments and they have no interest expense. So who has questions, comments, concerns? Frank, I see your hand up. If you'll go ahead and type your question in, that would help us. Jason has the first question. So Jason is interested in getting a shelf corp, which was our discussion yesterday. It's not what we're on today specifically, but he's using the Quick Cash to be able to purchase the shelf corp. And that's fine. Yeah, so that's a good point. So when we're needing cash, we can do an asset transfer. There's many different things that an individual could sell. One thing that they could sell is AR. We could liquidate AR into cash. If the client doesn't have AR, we can provide that to them, and we provide the AR to them for free through the grant. We're not selling them AR. So, Jason, what you're saying makes perfect sense. Sometimes people don't have enough for down payments. Well, they could use Quick Cash to be able to cover their down payment. Some people don't have money for the shelf corps like Jason. So yeah, so the quick cash could be a means to an end to get some cash to accomplish something bigger. Or the point today is it could be used entirely as an alternative to borrowing money. Okay, let's see. Jerry's asking, yeah, so if you go to 509pacific.org at the very top of the page, very visible, very clear, there's more information and the enrollment form for Quick Cash. Yeah, so some of you understand we're going over the flyer here. I'm not on the web page, but if you want to go to the web page, 509pacific.org, that's our 501c3 nonprofit. At the very top of the page, it says Quick Cash. That's where you'll get the all the rest of the details, the enrollment form. So we're very transparent. It's all right there. Thank you for pointing that out, Jerry. Let's see what else we have. Yeah, and Jeff's asking about the contract. So the contract to enroll in Quick Cash, everything that we do is going to be in writing because we want clarity, right? We want us all to be on the same page. So Jeff, I see Jeff, you put a comment here. Have you gone to 509pacific.org and have you read that? And so we talk about transfer in 24 hours. I believe that we're at 100% compliance with that. I know our team stayed late last night processing all the quick cash deals. We didn't get out of here until 8 or 8:30 p.m. last night because we sold so many quick cash deals. But we promise to get this 10,000 in 24 hours, and I believe we're 100% compliant with that. All right, thank you, Jeff, for that. Let's see. Oh, Frank says he accidentally raised his hand. So, yes, Frank, you're right. So there is a processing fee for each quick cash portfolio. That's absolutely true. Yes, because we have to cover our cost of the liquidation. What we're doing is we're transferring that accounts receivable into cash for the client. So we're giving away the asset, but we do have to offset our cost of the liquidation. So you're correct on that, Frank. I think we've covered that before. Now, Todd asked a really interesting question. Is there a back end fee? So that's a great point. So let's draw an example. So typically, if you go borrow money, you'll have payments and interest expense. Of course, we've talked about that. But if you work with a third party, a lot of times the third party will have some sort of success fee or performance fee that pays them, compensates them for facilitating the funding. And that's normal in the industry. But that's a great point, Todd. Yeah, when we use this strategy here, there is no performance fee, there is no success fee. So that's a great point. That's an extra savings. I guess we'll even add that. Todd, thank you for bringing that up. So we're going to be able to avoid payments, interest expenses, and I guess we'll call it performance fees if applicable. Yeah, so that's a great point, Todd. We're actually saving clients money three ways, not just two. I didn't even thought about that. Samuel's asking about who can offer this. So the quick cash program, anyone can help clients with it. We'll pay you a flat $100. It's not a big deal, but this is not a money making instrument. But yeah, you refer someone in, they use quick cash, we'll pay $100 per portfolio that they get. So absolutely, we're happy to pay you for those referrals. You might say, well, is there any money on the back end? Like Todd, well, there is no money on the back end. We're not charging anything on the back end, right? So the quick cash is simple, but it's not going to be lucrative for you, but it's simple. And so it's hard for us to find some way that you make lots and lots of money off of something that we don't make any money off of. But I guess theoretically, you could upcharge the client if you wanted, but we'd have to discuss that. But primarily, Quick Cash is really an instrument sold through our Shelf Corp stores. Our Shelf Corp stores is a different distribution model where we're setting up physical offices in communities across the country. all of our Shelf Corp store owners are certified, which means they come in, they spend a day, and they're actually certified. And so normally it's our Shelf Corp stores that are offering quick cash. But yes, if you're a reseller, you refer someone in that buys, then we'll pay you $100. And that comes from the grant. So that answers Celino's question. I think that answers Jeff's question. Several of you were asking this. But Samuel, you're right. A lot of times when you're out offering the Shelf Corp, if someone can't afford to purchase the Shelf Corp from you, then absolutely you could introduce the quick cash, and we could use quick cash to pay for the Shelf Corp. So that would directly benefit you, because now you're able to sell a Shelf Corp that you might not have been able to sell to someone that is not creditworthy or insolvent. Frank says he's got a client that wants to buy a Shelf Corp. Can he use quick cash? Yeah, I guess that's my point. You might have typed that before I gave the last response. So quick cash is available just on a standalone basis. Again, there's no secrets, there's no surprises. Go to 509pacific.org, top of the page, quick cash information is there. That's where the enrollment is. If you want to refer someone and you want us to pay $100 out of the grant, because again, we're not making any money off of this, but if you want us to pay you $100 for the referral, more than happy to do so. So that is not a problem. Jason asked a question, and it's a good question, and he's kind of comparing the Shelf Corp versus quick cash. So a Shelf Corp, which is really our bread and butter, that's what we talked about yesterday, for instance. And if you missed any of the past trainings, you can go access them here on our YouTube channel. But the Shelf Corp provides lots of things, right? It provides a legally compliant fundable entity. So we've got the entity, we've got the EIN, we've got the business plan, we've got the financial projections. We've got the collateral. There's lots that comes with the Shelf Corp. It's a business in a box. We'll just use that as a general term. So that really doesn't compete with this. This is just quick cash. This doesn't come with an entity. This doesn't come with an EIN. We don't need any of that just for quick cash. So it's a different alternative. And I guess you could say that it's a substitute. I don't think they compete with one another, but it depends upon what you want. If you want to run a business, you should have a fundable business. If you want a business that's going to qualify for business credit cards, for lines of credit, business loans, business automobiles, then we need to have a fundable business. That's a different alternative. And people can do a combination of the two. Hopefully that makes sense, Jason. So it's really all about meeting what the client wants, right? What's the client looking for? Are they wanting a fundable business to go get business funding? Great. Offer them the Shelf Corp. Some people don't want all of that. Some people just simply want cash. And then the quick cash is the direct route there. Michelle's, I guess, on the website enrolling in quick cash, and it does ask for a business name. If you don't have a business name, just put your personal name in. If you have a business name, then put the business name in. Sorry for the confusion, and we've had that question a few times. Michelle asked, will Madison be available for a call after the Zoom? She should be. Madison's on the Zoom right now. She might be on a coffee or a potty break or answering another line. But yeah, in general, yeah, give Madison a call. And if she misses your call, she's really diligent about returning calls. Some people will call and not leave a message, and then you go to the low end of the priority scale. So it sounds kind of obvious, but if you call in and Madison's not available on our and so this is the main phone number for our nonprofit, 509 Pacific. So if she misses you, leave a message and she'll call you back as soon as possible. All right. Let's see. Michael's asking about the quick cash. And yeah, I know, Michael, paying you $100 for a referral for the quick cash isn't much. But it's not designed to make money for us. It's just designed to provide a resource for the client. So If you're focused on making money, I would focus on selling the shelf corps. The shelf corps, you control the price, you control the markup. Most of you are making from $5,000 to $15,000 for every shelf corp you sell. So the shelf corps are a great money-making machine for you and a great resource for the clients. I do realize that quick cash doesn't meet probably your cash expectations, Michael, but it's not designed to do that. We're giving away the 10,000. I guess your argument could be, well, we shouldn't be giving this away. We should be charging clients for the 10,000 in assets. Well, if you open a Shelf Corp store and you want to change the pricing, you can. If you're a reseller, you really can't change the pricing. So that would be an incentive, I guess, to Michael to be a Shelf Corp store, because then you would control the pricing on the quick cash. All right, I think we covered that. It looks like one other question from Nikki. So Nikki's just confirming, does a quick cash client or buyer, or whatever you want to call it, do they have to have good credit? No, credit's not an issue. Do they have to have a business? No, business isn't an issue. So you're getting the point, Nikki, that quick cash is just standalone. $10,000 increment, standalone. There's not the other underwriting criteria that's needed for business loans. The Shelf Corp is the great solution you and I have, though, Nikki and everyone else. If you have someone that wants business funding, whether it be credit cards, lines of credit, term loans, real estate, equipment financing, whatever it may be, then the Shelf Corp is the way to go because it's providing everything needed for business funding. See the difference? They're not conflicting with each other. Michael wants to get a call after this. Yeah, so Michael right here. I don't know what else to do. It's my fault, Michael, not yours. But if you need help, you want to call Madison, and her phone number, which is the main phone number for the 501c3, 509 Pacific, and the phone number is also on the website, by the way, is 903-352-3390. All right. And Frank's wanting to become qualified to be a Shelf Corp store. Yeah, so there's no cost to be a reseller, which wasn't Frank's question, and there's no cost to have a Shelf Corp store. The key is to understand this. If you want to have a Shelf Corp store, you must participate and have a Shelf Corp yourself because we want you to be a success story yourself because people will ask you. As a reseller, no, you don't have to purchase a Shelf Corp to be a reseller. There's no strings attached, no cost, no contract. But if you want to own a store, what we need to do is get you enrolled, Frank, or anyone else, go through the Shelf Corp process, be a testament of the success of the process, then we can set up the store. But there's no charge for that. All right, well, hopefully that helped, didn't confuse. Our point today was that if you run into someone that's looking for money, there are other options other than just borrowing money. Because if we're going to borrow money, we're going to have to make payments, or they're expecting us to make payments. We're going to have interest expenses, and we may even have performance fees. We can avoid all of those. All of those go away with quick cash. So if you have questions, give Madison a call. We'll be back tomorrow morning, weather permitting. Thanks, everyone. Have a great day, and let's go get some money today. Thanks. Bye-bye.